And I mean, he was captivating. I mean, especially the ladies were like, oh, and especially when he did that. It ain't no thinking thing. I know his move. Okay. I know what his dance move was on. It ain't no thinking thing, right? Brain, left brain. And I tried to recreate it and I almost threw my back out. So it's not that I can do Trace Atkins moves, but boy, he's got the. Oh, look at the pretty horses running in my backyard. They're so pretty. Hey, horsey. Horsey. And now I've got a dead dog under my house. And fortunately, someone's coming to help me get him out today. And my other Great Pyrenees is just all beside herself because the neighbor that I got in a fight with, I think, poisoned my dog. And I don't know. It's just been a rough couple of days for me. So anyway, not to bring y'all down, but welcome in. The markets today, the E-mini S&P 500's up roughly flat, right? We're flat on the day. We are below the opening 15-minute range. We're below the cash open. We're below the overnight highs. We are above the overnight lows. We are right at VWAP, value weighted average price. We may talk about that, what that is at some point. And the NASDAQ, a little weaker today, down a little less than 0.75%. And market's doing well. I will say this, since I put money into the hedge fundies excellent adventure portfolio, you got to be ready for some wild rides. One day, was it this week or last week? I mean, in a single day, I was down like $10,000. So it was big, right, in a single day. And it was one of those days where the bonds and the stocks both went down in the same day. So it certainly, has some wild swings. We're having a nice day today, up $2,700. We're up $6,300 on the open. P&L year to date is all coming from that other account where I had the TQs in, and the TQs down in this account almost 13,000 on the year. So if you were a short-term trader, you'd be all upset. But by being a long-term trader, it's more palatable, and that's what I am. So let me show you what we're going to kind of talk about today. I think you'll like this. It's portfolio management. And how do you manage an entire portfolio that's made up of many different combinations of things? You may have options trades, you may have stock trades. How do you manage an entire portfolio? So let's look at the three things that I want you to have, and then we're going to set this up in your platforms. Okay, I want you all to set this up in your platform. See who we got in here today. The normal suspects are here. And hope all y'all doing well. It's hard losing a dog. And last night I got up at 2 o'clock in the morning and I went and walked my golden doodle, and my Great Pyrenees, who was the sister of the one that got poisoned, she was coming in the house. There was no stopping her. That dog ran me over, and she came, and that dog put her little head on my lap, and it wanted hugs last night because its sister's dead. And it was just so sad. And I don't know. When you lose a pet, it's tough. Seeing my kids cry because Della is no longer with us. Just really sad. All right. So 3 things that we look at when you're managing a portfolio is Delta, Theta, and Vega. And also we want to look at how much buying power that you have in your portfolio. If you know those 4 numbers, then you can manage a portfolio. So what I recommend to people is look at your portfolio as a forest. Hey, where's my thing? How come my thing's not working? Where's my pen? My pen. I like the rainbow pen. Look at your portfolio. Why is it not working? Oh, no wonder. Hold on. No. My little thingy's gone. And I know what it was. I was playing drums. There it is. Hold on. If I fall in the floor, y'all call 911 to come get me. Here it is. My stylus fell out of when I was playing drums a while ago. Get back in there, you little joker. Now Big Daddy's back. All right. So portfolio management, you can tell overall portfolio by looking at about 4 things. You look at your grades, which includes Delta, theta, vega. You and I will not pay attention to rho. I ignore rho. What is rho? It's a Greek that deals with interest rates on the effects on an option portfolio. We will not deal with that. The other one that I don't deal with is gamma. So let's try to explain all of these in a way that you guys can understand how to. Now, once we have the Greeks, then the other thing that I look at is my buying power. You know, how much buying power am I utilizing in the account? So these are all very important things to look at when you're managing the portfolio. So what is delta? Okay, delta tells me whether my portfolio, tells me a lot of things actually. It tells me, is my portfolio long or short? And recall that you and I beta weight our portfolio to SPY, so that regardless of the instrument that we're trading, whether it be TMF, UPRO, TQs, UPRO, that all of these can have a delta weighting that tells me basically, am I long or short SPY? So you see my TMF position here says that my beta weighted deltas are negative 52. That is the equivalent of being short 52 shares of SPY. So you see each one of these. So my TQQQ position is the equivalent of being long or holding 130 shares of TQ, of SPY. My UPRO, I have the equivalent of 327. So when you add all of these up, it gives me a delta, overall delta, subtotal here, the total is 398.6. What does that mean? That means that I am long 398 shares of SPY. That's what my delta equivalent is, SPY beta weighted. So beta is this: if the market has a beta of 1 and a stock has a beta of 2, right? So the SPY beta is always going to be 1. SPY is 1. And if another stock has a beta of 2, that means that it basically moves twice what SPY would move, right? SPY moves 1, it's going to move 2. So that's basically what beta is. And if we take off the beta weighting, then this thing is, you know, it's talking about the delta of each individual component, and this number is no good when it comes to delta, when it comes to portfolio management. We want to have this beta weighted to the market. Beta weighted to SPY is the best way to know if are you long or short the S&P 500. Our portfolio is long, meaning we have the equivalent of 400 shares of SPY. Any questions on what delta means? Thank you so much, Brian. I appreciate that. And yeah, I really appreciate that. I know you see it every day. And just this week, here's the weird thing. So we were in Sunday school class, and I was sitting there talking about, you know, my neighbor and how, you know, we had a fight over a mailbox, and he threw a mailbox at me, and then, you know, I took the starter pistol and started shooting it up in the air. So we was talking about that in Sunday school class, and I said, y'all know what I'm going to do? I'm going to forgive my neighbor this week for busting me out for deleting him as being a friend on Facebook. It's a long story. I don't want to get into it. And because our Sunday school lesson was on forgiveness and not holding grudges, right? And so, honest to God, that was my whole intention this week is, hey, I'm going to make peace. And then, honest to God, the dude, you know, kills my dog. And now I'm like, how can I now? So it's like I want to hold my grudge against him a few more months. But I know what to say. I told my pastor that last night at church. I was like, the week that I was going to, you know, and he's like, God's like saying, hey, how serious are you that you're going to forgive this dude? And it's hard after somebody kills your dog, right? Because where I come from, you kill my dog, you may end up at the bottom of a well in Mars Hill, Alabama somewhere and never be seen again. So that's what, you know, the kind of flesh comes out with Bobby going, it's time to call up the Muscadine Mafia. it's time to get rid of old boy who killed my dog. But I'm not going there. Not going to do that. Forgiveness. So it's hard. Y'all know the struggle. The struggle of being a good human is tough sometimes when people do bad things too. All right, so you know what delta is, okay? Delta tells me my direction and by how much direction am I. So you can actually come in and say, am I comfortable being long 400 shares of a underlying that is trading for, SPY is trading at 438. So it's like I have 400 shares of a stock that is trading for $438. Isn't that cool? That's what that tells you. All right, Theta. Let's talk about Theta. Any questions about Delta? Now remember, Delta does different things too. If I told you to sell a 30 Delta put, Delta in that instance means it's an approximation of selling a Delta that has a 30% probability of being in the money. So Delta is also used as an approximation of a percentage of being in the money. So if I say sell a 30 Delta put, that's the equivalent of telling you to sell a put that has a 30% probability of being in the money. Okay, so everybody's got that. We're on the same page. Theta, y'all, Theta is something that is just beautiful. Theta is the amount of money that we should be up in our account every day. It's a daily figure based on the options that we have sold in our portfolio. So 503.85 is this. So if I sell an option, and a lot of times I'll compare selling an option to a balloon or to an apple. So let's look at it as an apple. This is an apple, believe it or not. So we've got our pretty little apple. And we sell this apple for $1. Okay. And pretend this actual is an option, but it's an option apple, not the stock actual, but it's an apple. So what if you sell an option for $1? What you're hoping to do is to buy this thing back once the apple has been eaten or decayed and has rotted. So if I can sell an option for $1, and options are priced times 100, right? So I bring in, because it's 100 shares, I bring in $100. Now check it out. I want this option to rot or decay over time. Theta is the option decay. It is the amount that an option decays over time. And in the instance of our portfolio, it's basically saying the options, Bob, that you have sold in your portfolio is decaying by plus 500 a day, which means if all things are equal, if price doesn't go up or down, or if volatility doesn't go up or down, and everything stays the same, theoretically, ladies and gentlemen, I should make $500 a day. Isn't it nice to know that? It's nice to know, wow, I've got a portfolio that theoretically should make $500 a day. And as that option decays, then I get to buy this option back for maybe 50 cents. And after it's decayed, there's been some meat coming off the apple, so to speak. So if I can buy this rotten apple back for 50 cents that I sold for $1, I'm happy because I've got a $50 profit. Now, I'm going to give you something that you'll just have to take my word on it. Never take my word on anything. I want you to do your own research. Don't believe anything that I say. Have I told y'all this yet? Have I showed y'all that I probably did this on our first day. I just don't remember. I don't know a person by the name of Jack Shite. I have no clue who Jack Shite is. Y'all know what I'm talking about, right? I don't know Jack Shite. Okay. So don't take my word for it. I'm often wrong. If you ever catch me being wrong, just call me out. I mean, I'm often wrong. often. And I'm only one few people that'll tell you, I don't know Jack Shite. Never heard of him, never met him, don't know. So there's a lot of stuff that I don't know. But I do know that options decay. Now, the only thing that keeps an option from decaying is that option being in the money. And when that option is in the money, it starts swelling So instead of you trying to buy back something that looks like this, all of a sudden you may have to buy back an apple that looks like this if it's in the money, because that thing can also swell. Okay, but we're not talking about that now. We're just talking about the general principle of an option that we sell. Options decay. Why do they decay? Because they have an expiration. We've all got an expiration. All of us, believe it or not, have an expiration date. So we all decay. Options decay, and that is called theta. Theta is the decay in the option. And if we're looking at it from a portfolio standpoint, what this tells me is that overall, I have a portfolio that should give me $503 of theta per day, which is $503 of profit per day. All right, here's the little benchmark. No, what do they call it? Not a benchmark, but a standard. What am I talking about? Someone throw it up. What am I saying? The benchmark. What's the word? I can't think of the word. Anyway, here's what I'm going to tell you. Overall, ladies and gentlemen, you should expect. So I'm going to give you an expectancy to keep 25% of your theta. Whoa, Bob, that's a lot different than keeping $500 a day. I want the whole 500. I'm just telling you that overall, your expectation should be that whatever your daily theta is, that over time, with options that are going in the money, options that you're losing on, options that you're winning on, options that you're closing early, your expectation over a large number of trades is that you will keep 25% of your theta. So what does that mean? Let's go back to the portfolio. So even though I have an expectancy of $504 a day, right? Then all you got to do is go 505 divided by 4 or times 225. 504 divided by 4 is 126. So in reality, so theory says I should have $504 a day. In reality, I'm going to keep closer to $126 of profit a day. Now, with this number, yes.
Is this kind of like, people talk about deviations from the standard? Is this kind of like a deviation? Is that what we're looking at here, or what we could actually expect?
No, I think it's not a deviation. What we do is we sell options based on standard deviations, right? So, a 16 delta option is a 1 standard deviation option. So the 30 delta is, I think, about a half of a standard deviation. 2 standard deviations would be, oh, there's those horses again. It's like squirrel. My mind just goes to the horses. They're just galloping and having a great time. What was we talking about, Brad? Y'all see people that when a squirrel comes up, right? You're like, squirrel. Mine is horses. Look at the horses. Standard deviation. So if you were to go out 2 standard deviations from the mean, then we're talking about an option with a probability of being in the money of around 5%. So it's a little different take there, but hey, your point is well noted. Well noted. All right, so that's theta, y'all. So I can actually pretty much figure out how much money. It's going to deviate a little bit, but I could say, based on my portfolio, I should be expecting $126 a day. Okay, if everything stays the same. So if I multiply that times 365 days, if we were to keep this portfolio going for 365 days, then based on my current levels, now, y'all, these are some big generalizations, but this is what I use to figure out what my expected return would be. So I should bring in $45,990 on a $153,000 account, divided by 153,860. So we're looking at 29.89% is what we should be on target for right now. Isn't that cool? Now think about it. This is stuff. How do you ever know this? I don't know, because we don't teach it in academia. There's no way that this is taught in academia. This is taught in the hedge funds. This is taught in the, the upper echelons of finance. People don't know these type of things. Now you're going to know it. And with power and knowledge comes responsibility, because believe it or not, ladies and gentlemen, you can have too much theta in your account, because theta sounds awesome. So you're sitting there going, well, Bobby, I need to have as much theta as I possibly can have in my account. And I would say, no, 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 no. Because theta, the more theta that you have in your account, the more risk you have in your account. So if something goes against you, then it can hurt you. And we'll go over some ratios and some different things that'll help you keep this in mind. But today, I just want this to be a very general introduction to the Greeks and to portfolio management. That's what we're doing. Portfolio. I'm showing you how to manage your portfolio. I'm showing you how basically to be your own little hedge fund manager. Manage your own little hedge fund. So we look at delta. Do you want to be delta neutral? Do you want to be short the market? Do you want to be long the market? I'm long the market by 405 shares of SPY. And delta allows us to compare apples to apples, even though you may be trading oil or bonds or gold or wheat or corn. And it allows us, the platform allows us to convert everything to shares of anything. Now, I could convert this to shares of Q, right? We could convert that to NASDAQ. Well, it doesn't say it's going to let me do it to NASDAQ. Let's see what else. Not sure it will let me, because I always keep mine to SPY. Always keep mine to SPY. I mean, you could say, how am I looking as far as Apple goes? Well, I'm not going to do that either. It's something that's not going to convert. But just as a general rule, keep that to SPY, beta weight. Right? Now, Vega, ladies and gentlemen. Now, also, if I'm selling options, I have positive theta. If I am buying options, and you'll see here, I have 2 long options, right? I've got 5 long puts in the E-minis. Then a long put or a buying options is a short theta play. So what this is saying is these options should deteriorate by $9.65 a day. So my rule is I never want a negative theta account. I never want time working against me. I never want the decay working against me. Overall, I want to have positive theta in my account. Questions on theta? Vega. Vega is where you get killed. Vega is where you get killed and blow out your accounts. And if you are an option seller, and remember, by selling options, we limit our upside profitability, but we increase our probability of success. If you are a buyer of options, what you're doing is you're giving yourself unlimited profitability, but you are drastically decreasing your probability of success. Vega is volatility. Vega is the only Greek that is not actually a Greek. It's not actually a letter. It's a made up Greek. Okay. Theta is actual. You go back to the Greek alphabet, it's a letter. Delta, a letter. Beta, a letter. Alpha, a letter. Gamma, a letter. Vega, made up, but nonetheless still important. So if you sell options, you're going to be short Vega. And short Vega is where people blow up, because what this basically says is that for each 1% move in volatility that increases, I'm going to lose $38. If volatility in the market increases by 2%, I'm going to lose $76. Does everybody see that? So Vega, if it's negative, means I get hurt if volatility increases. So what I like to do is to make sure that my negative Vega is not too big. In fact, if I could have positive Vega, I like that. But most of the time, because I'm an option seller, I don't get that. So Vega is volatility. If volatility goes up 10%, then I lose $380. Speaking of which, let me go up over here one more time. If the SPY goes up $1, how much money do I make? That's it, Brad. $407. Isn't that cool? Because I have $408 or 408 shares of that. So if it goes up $1, if SPY goes up $1, I make $410. If SPY goes down $1, theoretically, I should lose $410. Do y'all see how all this stuff is so beautifully intertwined? How you can tell so much about your thing? So here's the amateur mistake. Here's what amateurs do. Amateurs look at, and first-time traders start looking at everything individually. Oh my gosh, look, I'm up 600 here, but I'm down 200 here, and I'm down 12 here. And they start looking at these groups of trades, and I've got things put into groups, right? So I've got something called covered calls, and they start looking at it and going, oh no, I'm up $740, yay. You know, and then they'll start looking at different things, and it doesn't show all my stuff. Where's all my stuff? Portfolio, all. Anyway, they start looking at individual trades. But you, ladies and gentlemen, look at only one thing. I don't need to look at all this. Here's what I do as a portfolio manager. I look at this: Delta, Theta, Vega. From there, I can manage any portfolio. I don't care if it's $1 billion portfolio. I don't care if it's $1,000 portfolio. All I need is Delta, Theta, Vega, and I can manage a portfolio. Now, what is gamma? I need at least, I don't even plot gamma. Gamma is the acceleration of delta. How about that? So let's talk about gamma just a little bit, and I'll tell you why I don't worry about gamma. Gamma is the acceleration, I can't spell, y'all know that already, acceleration of delta. So that means if my delta is 410 and my gamma only becomes an issue closer to expiration. Closer to expiration, gamma starts to matter. So that gamma basically is a risk of short-term options like the 7 days that we've been doing lately. It can become a factor the closer you get to expiration. And that's why most of the times when I'm selling something that's 60 days out, that I'm going to close those options when they have about 3 weeks left remaining in time. I will manage those options. So if I sell something that's between 45 and 60 days expiration, DTE, days to expiration, then I'm going to look to manage those options and close them at about 21 days to expiration. Why? Because after the closer you get 20 days and below to expiration, you have humongous gamma risk. Otherwise, we never have to worry about gamma. And that's why I don't even track it. I don't even look at gamma. And you can if you want to, but it's not something that I look at. Again, the other one that I never look at is rho. Rho is the effect of interest rate movements on options. Really doesn't fit into anything that I'm worried about when it comes to the pricing of options. Okay. So,
Hey, Professor.
yes.
Quick question. When we were watching that last video with Karen, wasn't she asked about which one of these she watches? And if I believe her reply was basically she doesn't really watch gamma or any of that, correct?
Yeah.
She just lets them ride.
Yeah, I don't worry. Yeah, she doesn't worry about gamma. I didn't worry about gamma. The thing that Karen never worried about that I worried about, I mean, I remember I was a member of a group that studied Karen for maybe about 4 years. And we did all kind of modeling and things on what she did. The thing that concerned me with Karen is she didn't look at her portfolio deltas. The number that I'm showing y'all, which is my 400 and whatever, 98, she never looked at that. So she never knew if her portfolio was too long or too short. And I think that was kind of one of her things that was a little bit of a detriment, but what I know. So we look at portfolio delta. She only looked at the deltas of her initial trade. So she would sell a 5 delta put and she would sell a 10 delta call. So a put that had a 5% probability of being in the money and a call that had a 10% probability of being in the money. She never monitored her portfolio deltas. And you'll notice if you want to go out, there's 4 or 5 interviews that Sosnoff did with Karen. And you'll notice one of them, he says, I love everything that you do except one thing. There's one thing. He goes, you don't look at your deltas. And Karen looks back at him and she says, I don't have to. And that would kind of, I was like, well, I think you kind of do. What I know. Yeah, she was a success. But I think you got to look at those portfolio deltas. And I'm going to give you some ratios that will help you to keep yours in line. So I'll give you some. Benchmark is not the word. I can't remember what the term is I'm looking for. Y'all spit it out sometime. But there are different things that help us kind of keep these things in line. And of course, I'll build a spreadsheet for it. So I'll give you that spreadsheet when the time comes. That'll monitor these things for you. All right. So with this now, you can monitor. And the other thing is basically knowing what your buying power will be. So this says I can trade a buying power of $7,205 in this account. Now, in an options portfolio account, if that's all you were trading, that is way too low. I would want to make sure that I keep 50% or more of my entire account in buying power. The reason I don't have that much buying power in this portfolio is because I've got a lot of equities in it, right? I've got a lot of shares. So I've got shares of a lot of different things here, a lot of things going on. So now you have a relatively, so forest first, right? You look at your forest. These 3 numbers plus your buying power is all you need to know to run a multi-billion-dollar portfolio. It really is. It's all you need to know. These 4 little things: buying power, delta, theta, theta. If you can do that, you can manage any size portfolio, because it lets you relate everything down to just 4 little numbers. And you don't have to worry about the individual components and all this. So example, my delta right now is 412. If I wanted to neutralize this right now, all I've got to do is sell a future, for in the E-minis. And I'll show you this later, but see, all of a sudden you go, I just want to be delta neutral. I want to be neutral to market. I don't want to be bullish. I don't want to be bearish. I just want to be neutral. And there's a lot of strategies out there and some hedge funds that attempt to keep delta neutrality. So by doing that, all I'd have to do really is to sell a future in the E-mini S&P 500s, because one future in the S&P 500s would give me negative 500 deltas. Or I could sell, and let me just do that real quick. I'm going to trade in a future. Okay, I want you to see this. And this is what the micros are great about. What's this? This is the micro E-mini S&P 500. Now, the cool thing about this is you can sell a future here, and it will allow you to get negative 50 deltas by just selling a future. So check this out. Now, which one do you sell? They've all got their own expirations. They've all got, this future. This is not an option. This is a future, right? So it, you go where the volume is. You go where the liquidity is. So you wouldn't sell this one. You sell this one, because this is the way to go. So look at my deltas. What's this? My deltas are 406. Everybody remember that number, 406. I go over here, and that's selling a future. And this is not an option. This is a future, right? If I sell one of those, watch what happens. Let's get that filled. Okay, we're filled, right? Now remember, my deltas were 406. No, that was put it on all accounts. Ta-da! How about that, ladies and gentlemen? So just by selling a single future, I decreased my deltas from 406 to 356 instantly. That gives you a lot of power. So now you go, well, what if I wanted to get another 350? Then all I got to do is sell 7 more of those, right? I could sell 7 more of those and be completely delta neutral. Isn't that wild? You know, let's see, do I want to take that off or not? Let's see. Let's see how profitable this thing is that we just put on. With dome or dome, some people call it the dome. Oh crap, we've lost $13.75. Oh, behave. Oh, so you gotta buy it back if you want to. So let's put an order in to buy before we lose too much money. I go up. So I put an order in there. It'll probably be filled. Here we go. Boom. Now then we go back. So we just lost $12.50, y'all, just for an, send me a check. So now when we go back to our total account, we should be back at $406. Y'all, you see what power that is? I can increase my deltas with the stroke of a little click. If I had done, 8 of those micros, I could have been completely delta flat. So there are times when I go, oh no, I don't want to be long the market. There's volatility, and all I got to do is go into the futures market. And the great thing about the futures market is the futures market is open 23 hours a day, virtually 6 days a week, and it opens back up on Sunday. Guess what I do every Sunday at 6 p.m. Eastern time? I look for the futures. That's when the futures open on Sunday. And I've got my little phone with me, and I'm just kind of seeing what the futures are doing. So you got a lot of power by being able to trade futures, by being able to trade options, by being able to trade stocks. You got all this stuff that you can do to manage a portfolio. All right, now here's what I want you to do. And some of y'all have asked about this. So y'all want all of this in your portfolio, in your platform, right? Let's see if this will do it. So I'm going to share my workspace, and I'll say share. Okay. So let's go into our chat, and I'm going to copy and paste it I'm going to paste it into our chat so that y'all have it. All right, everybody got it? Look into our chat on our Zoom, so you've got it. So let's close this account. This is a real account. This is real money, y'all. This is real stuff. All right. So let's close this and let's go into my paper money account. And again, I'm not good with paper money. So I like putting money on the line. I don't like paper money, but we're trying to show y'all things to do in your account. So let's see if we can get y'all set up to where yours looks like mine. So you got all the tools that you need so that you can see your delta, your thetas, and your vegas. So let's sign in here. Who's ready for a musical interlude? I'm about ready for one. This is deep stuff. Everybody ready for a musical interlude? All right. So, as you're probably aware, I have told you that, let's see, what is this? Oh, crap. It helped if I logged into my paper money account. Let me do it again. See, I told you I'm terrible with paper money. That's my real account. Let me log back in, see if we can do this. So I've told you before, we grow up in a world where we teach our kids to, wear helmets when they're riding bicycles. And y'all know, y'all didn't ride, or some of you probably did. Y'all are, at the point when you may have paper money. We don't allow our children to color outside the lines because we want everybody to think the same. Also, we send students into programs where you all must think the same. We send our students in so that they come out and they go, we need a 60% stock, 40% bond portfolio. And then we make you take standardized tests that all have a single right answer, right? We've got all of that stuff going on. So, we discourage free thinking. And what do we do with free thinkers often? Free thinkers, we try to convert them. Why do we try to convert free thinkers? Because free thinkers are a threat to the norm. Why does your thinkorswim says there was an error? You may have to call tech support or something. Is your caps lock on? You may do. Okay, you worked it out. So free thinkers are a threat to society, to the establishment of society. Why else would someone try to demonize someone like Joe Rogan, who says, hey, this mask crap is ridiculous, you know? And isn't it funny now that we've got war in the Ukraine, that we're not hearing anything about the mask as much? And at the State of the Union, you know, you don't have to have masks anymore. Isn't it amazing how things just change, how they just go away? So you can't have anyone establish or to contest the authority, because if you go up against authority, I fought authority and authority won, right? We know the song. Authority is threatened by those of us that are free thinkers. Now, how many times do you think that I'm going to be invited to Merrill Lynch to deliver a presentation on investments? Do you think I'm going to get that invitation? Oh, heck no. How many times is Wells Fargo going to come in and have me talk to them about wealth management or asset allocation? No. Matter of fact, it is amazing that I have a platform here at the University of Alabama to teach in this wonderful program that we have here. I've been through the program. It's a wonderful program. But my methodology and my thoughts are somewhat contrarian to the established position of, hey, we've got to have all A, B, C, D answers, and we all have to come out basically thinking the same, because it is not true at all. It's not true that we all have to be the same thinkers. So let me stop the recording as we do our musical interlude.